Good morning, everyone. This is Doug Campbell with Right Way Options, coming to you with a morning market preparation video for March 26th, 2018. Hey folks, just a quick reminder, this is a short week this week with Friday, the market being closed for Good Friday. So we've only got 4 days this week. And my, oh my, we had a brutal week last week with some really hard selling, breaking our wedge pattern, breaking through the 50-day moving average on a couple indexes, just pretty darn ugly across the board, as those bears just kind of showed up from everywhere on the worries of the trade war between the U.S. and China. Now, I suggested during the live class that this whole trade war thing that was being spun and whipped up by the press, I suggested might be nothing more than a tactic to bring both parties to the table to negotiate a better deal. And that seems to be what has transpired over the weekend, at least a big reversal in the fevered pitch of what was happening in that over the weekend. So this morning we are looking at about a 275 to 300 point gap up this morning. Anyone that is short into the weekend, that held on into the weekend, is going to experience a major squeeze this morning. And this could really trigger what they call a short squeeze, where anyone that's still short or caught short is going to be forced to cover likely this morning to avoid some of the risk to their account, and that will force more people to buy to cover, pushing the market even higher, squeezing even more of those short traders out of this market. So we could see quite a volatile day, lots of swings. Keep in mind that this market is capable of moving 100 points in the Dow, swinging 100 points in the Dow within minutes. So kind of be careful of that. We could see, I would expect some really fast price action today. I would expect big intraday swings, lots of volatility in the market. So be very, very careful with that. And, one of the worst things that can happen to a retail trader is political volatility, because that mood shifts, in about half a heartbeat. And then everything changes, and it gets all whipped up. All this emotion gets whipped up in the press, and it just seems like it's the poor retail trader that gets the worst of this, because they get chopped to one side and then chopped to the other, and all of the back and forth. So I continuously repeat, to remind everyone that cash is a position. You don't have to trade in a market where you really have no edge. And we've been talking about that a lot lately. And I'm guessing there's quite a few people listening to me right now that have experienced that their accounts have been chopped up badly in the last 3 months. So remember, you can stand aside. You can wait for your edge to return when the market settles down and gets back to some more normal trading. We don't have to get in here and fight the market during this mess. And trust me on this, because I learned this the hard way. And sadly, it took me several times to finally learn this, that you will be a lot happier as a result. Your account will be in a lot better condition as a result if you wait for the edge to return for the average retail swing trader. So be careful. Violent moves like this aren't predictable. Had the mood turned for the worse, we could have gapped down 300 points this morning. And there's not much we can do as traders. Well, there's nothing we can do as retail traders to control that. Remember, it's the big guys that move the market. We just come along for the ride. And if we just wait for those big guys to kind of settle down and figure out what direction they want to go, then we get an opportunity to just tag along and make really nice money as a result. But if we give it all back during periods like this, we end up destroying our confidence as traders, our ability to trade. We become frozen in the market, unable to pull the trigger anymore because we're so beat up. So think about that as you plan this week, that sometimes sitting on the sidelines, sometimes just standing aside can be one of the best things for you as the trader and your account. Keep that in mind. Let's take a look here. The Dow, or the diamonds here, finished on Friday just only about just a little more than 1.5 points from the 200-day moving average. The SPY actually broke the 200-day moving average by a tick or two by the close on Friday, and you can see gapping up strongly here this morning. The Qs, which had been the strongest index out there, really strongly gave up that 50-day moving average, collapsing pretty hard. Now it's gapping up significantly this morning. Keep in mind, any rally back toward resistance could, really be nothing more than a move back to a potential failure point. We've got to get a lot of technical damage repaired here, and I would suspect some pretty volatile price action while that goes on, so be careful. IWM finally broke this little uptrend on Friday, broke through that to the downside, moving really sharply, more than 2% to the downside, and now is gapping significantly higher. So it may recover this little uptrend and may end up being the strongest index, which is kind of surprising. But also keep in mind, technically, we've got some major problems here. We had a high here, and this turned out to be a lower high. So keep that in mind. We got a lot of work to do before we repair all this technical damage that has been created from all the emotion here in the market. Let's take a look at the VIX real quick. The VIX responded, kind of like we've been talking about here recently, bouncing off of this important price support right here, bouncing off that price support and also utilizing that 50-day moving average as support, rallying up here into about 25 handle here on the VIX, which means considerable volatility in the market is present, and that makes it very, very difficult for most retail swing traders. Let's take now, if you're a very, very fast, very adept day trader, this can be a great market for you. And, for the investors out there, you just sit tight. That's about all you can do at the moment. Let this die off and then make some decisions after we spell off some of this volatility. Let's take a look at T21.22. T21.22, the 4-week new high, new low ratio. And you can see on Friday, we reached that extreme level here on Friday in that bullish reversal zone. Of course, no one knew that the trade talk was going to soften so much this weekend, and now we're going to get a very violent move to the upside, and who knows where that will end us on the day. It is possible we could swing kind of like we did right here. We could swing from that very oversold type condition to a overbought condition in a day. So be careful here. Remember, we're under a lot. There's a lot of technical damage in the charts. We're under a lot. Price is under a lot of price resistance levels, and so we're going to have to structurally start breaking through those, holding those as support before we can start building much confidence in being able to determine a direction for the market. Let's take a look. Whoops. Take a look at the economic calendar today. There's no big market moving events on the calendar today. We have the Chicago Fed and the Dallas Fed this morning. We have several bond auctions and a couple of Fed speakers here today, so not a whole lot going on here. On the earnings calendar, we have about 70 some companies reporting earnings today, and they're already coming in this morning. This is the last week of first quarter earnings reports, and we will be slipping over into second quarter here in about 2 or 3 weeks. I think it's closer to 3 weeks now. About 3 weeks we'll be starting another round of earnings. First quarter earnings reports, they're actually the fourth quarter reports, but in the first quarter of a year, it just seems to drag on forever, and then by the time it's finished, we're already kicking into second quarter, and that's what's going to happen here. So we may have a couple weeks, 3 weeks here of a lull in earnings reports, and then it's really going to pick up hard. And we'll see that volatility back in the market based around those earnings. So with that, everyone, hey, I want to wish you a fantastic day, and also I want to thank everyone for all the great comments and things on these videos. I do appreciate it. You guys are the best. I'm glad you find this useful. So feel free to share this video with anyone. This is a free video. It's meant for anyone. If this helps you prepare for your day, fantastic. I'm glad to help. If this is the first time you've seen this information, please do me a favor and click on that subscribe button there on YouTube and the follow me button on Facebook. And please click those thumbs up buttons. That helps me a lot in having those algorithms of the services show these videos to more folks. Everyone, take care. Have a fantastic week, and I will talk to you all very soon, bright and early Tuesday morning. Take care, everyone.